Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Welcome back. Great to have you with us. Alex Whitlock and Phil Tarrant with you today. A treat for many of our faithful listeners.
Back by popular demand. I see traffic's been performing a lot better in my absence of this podcast. Downloads through the roof, they're telling me.
Well, we have an opportunity, Phil, with you here to take a bit of a journey around the world of media and mortgages rather than talking about sort of the more, I guess, BAU stuff with our usual guests with Eva and Costa.
Well, I think this is sort of the starter pistol for business in Australia today. It's the day following Australia Day, and this is typically when most people start getting serious about business. It doesn't feel like that. We've been at it for the last couple of weeks, and feels like a holiday hasn't taken place. But everyone's back from their European and skiing holidays and to Japan and elsewhere, and the rubber hits the road, and people are stuck in today, and here we are.
Well, our guys have been busy. The Finney team, they've been flat out since they've been back. It's a very small sample market, but they've been inquiries been pretty significant, both sort of from their existing book and also new inquiries coming in. They feel it's a pretty positive start. They would tend to be backed up by the sort of the limited data that comes through. There's no auction clearance data coming through as yet, but agents that I speak to are saying that things have picked up fairly well. Confidence seems to be fairly high. So it would look as if it's going to be a pretty busy year.
Yeah, and you can always make a year a busy year depending on how you choose to approach your broking business. It's certainly a mindset thing. You can sit around and say, I'm going to take it easy this year and take the foot off the pedal, and you can have a quiet year, or you can get stuck in, and there's business out there if you want to go and find it. And we're seeing that from the Finney crowd, and I've seen some of those numbers come through. They're off to a stellar start, and they're not sitting idle at all. So they're more of the same. 2026 is going to be dominated by all the usual discussions around housing affordability and the price of mortgages and restrictions and what APRA is going to do, and essentially business as usual. So when I'm chatting on the Smart Property Investment Show, it's very much about getting your stuff sorted out pretty early on so you can capitalise on real estate opportunities as they arise. So good brokers will be dialed in with their customers, no doubt, and supporting them, irrespective of if they're investors or owner-occupiers.
I don't think I can remember things ever being tighter, though, for investors. Markets are, there's little margin, certainly for investors. If you're buying, certainly, like if you're buying in Victoria, there's definitely opportunity, but it's a tight market still. So I think serviceability is a big consideration. And if you're an owner occupier, house prices are up. Mortgage rates haven't come down. There's very little signs that they are going to come down.
Yeah, I can't remember who I heard talking about this, but I didn't mind their logic around it. And because of the serviceability constraints, it's getting harder to get a mortgage. And I think the consensus is it will continue to get harder as a result of open banking and data matching and all the stuff that you used to be able to keep slightly grey inside of a mortgage application now is getting a lot tighter. So this idea and this logic, and it's something certainly for brokers to embrace, is this idea that rather than a mortgage being a liability, i.e. it's debt and it's a liability, it's actually an asset. So being able to secure a mortgage in the future is going to be harder and harder. So therefore, if you get a mortgage and you're able to service a mortgage and you're able to continue to get mortgages, they're going to be seen as an asset. So it's really a wealth creation tool moving forward, which it always has been. But the logic around that, a mortgage isn't going to be something all Australians are going to be able to get. It's going to be harder and harder, particularly for investors as they try and grow their portfolio. So it's a subtle sort of frame of reference, but I don't mind the logic of it, looking at it as an asset, and therefore mortgage brokers have a critical role to play.
It's going to be interesting to see whether we do take a shift to being more of a nation of renters as home ownership becomes more and more difficult. And it is difficult. Look, sure, if you're prepared to travel, if you're prepared to think a bit more creatively, there are areas where most first home buyers can afford to buy, but it is getting tougher. And the question is, do you become, if you do increasingly become a nation of renters, or if that increases, where does the rental accommodation come from? Is the government going to step up and provide more accommodation? Is it down to private investors to provide rental accommodation? It's going to be interesting.
Yeah, no one knows exactly how it will play out. However, this idea that it will be harder in the future to secure a mortgage, and therefore you're probably going to have more people renting, and it's a natural thrust of the way Australia is going. It's going to start emulating other parts of the Western world, like Europe, for example, where you have lifetime renters, and the government is preparing for that, and they're putting down and laying down legislation. Government being federal and state, you only need to look at state-based legislation around renting now. No grounds evictions, all this sort of stuff. We're slowly setting ourselves up for this idea that you'll be able to do lifetime renting, and you will be able to live in the one rental property for potentially your lifetime. Great. That's just the nature of the beast. But the way I look at it from and through the lens of mortgage broking is it's getting harder and tighter and tougher to get a mortgage. And I think more and more Australians will actually continue to leverage a mortgage broker, or at least shift to a mortgage broker away from banks. And you're probably at saturation rates now. What is it, 75% of people use a mortgage broker? It's going to take longer, I think, and with more rigor for brokers to set loans in the future. So I know a lot of brokers are really looking at productivity side of things and ensuring that you've got your right people doing the right part of mortgage broking. So, you might have frontline sales force, for example, here in Australia, you have very robust and rigorous back-end operations in places where you can outsource, and or you will be leveraging AI. And this is the question of the day for everyone. But in order to make mortgage broking can be a very lucrative business. Not only are you creating upfront cash flow with the upfronts that you're creating, and that should allow you to run a business. You're building out a saleable asset in a loan book, and I'm happy to chat about loan books today. I've been doing a lot of work on it in the last couple of weeks or so. But generating mortgages through clever marketing plays, for example, giving back up parts of your upfronts or parts of your trail, I'm struggling to see how models like that are going to be moving forward, because I just don't think the margins are in it from a economics of mortgage broking point of view, and there's a big question mark for me around it.
I reckon we'll take a break there, Phil. Let's dig into it when we get back. Welcome back, Phil Tarrant, Alex Whitlock with you, Broker Daily Uncut. I'm going to pick up where you left off, Phil, with sharing, splitting trail books and upfronts, and it's something which is done commonplace. There are shared commissions for referral partnerships. I would imagine that there are models where you've got shared trail books to help sort of facilitate growth of a loan book. I did notice, though, recently a bit of a back to the future. I noticed one brand that is coming out and marketing openly that there's a refund element to their proposition. I'm not really very, very across. I think we'll have a look at Broker Daily. I've been around long enough to remember refund home loans and a couple of other models going back to early teens.
Yeah.
Maybe.
No, would be early 2000s, 2004, 2005.
I reckon it was. It may have kicked off then. I reckon it came to a fairly bloody end.
Yeah.
I'm going to say probably about 2013, 14, something in that region. Look, it's a model that's for brokerages looking to get an edge, looking creatively at the revenue that's generated and then your efficiencies and an angle of giving that back. And there's plenty that do it for charity, which is a bit of a different proposition when you're choosing a broker and there's money that's donated to a charitable cause, or using or sharing or splitting commissions, be it trailer up front, for referral partnerships where you're growing your book faster and there's maybe some sort of reciprocal agreement. But I was interested just to see, a broking business marketing itself openly to the public, saying, we are refunding or giving away our commissions.
Yeah, these things pop up every now and then, and there's sort of the back end organic nature of potentially referral payments, and which all needs to be disclosed, and that's all appropriate if done so. That largely defines many smaller mortgage broking companies. But when I start to see sort of really above the line active marketing around, we'll give you back part of the upfront, and we'll give you back part of the trail as part of a business proposition, as in a competitive advantage, that really raises alarm bells for me. You just need to look at the economics of mortgage broking, and if there's that much fat in your business, I query and question that whether or not it's legitimate. But the biggest issue I have is this notion that you're telling Australian customers and consumers and other stakeholders that mortgage brokers are making so much money through upfront commissions that they're able to give you part of that back.
We've been here before, and we've been through the whole Royal Commission. We've been through various iterations of questioning commissions, and I have a very, very deep-seated fear of any kind of proposition around refunding payments that brokers receive. It for me, it goes a long way to damaging the broker proposition. And it's not just as simple as saying, "Oh, we make so much money, we can give it away." It's really this. There's a huge lack of understanding at consumer level about what brokers actually do. Huge lack of understanding. They don't conceptually grasp that brokers do an awful lot of work for nothing and are only paid upon success. I think there's not all consumers, but there's a lot of consumers that will treat brokers as, with a little bit of sort of suspicion because they don't really quite understand how they work. I talked to an accountant the other day that, had no idea how brokers were paid. They thought that there was still some sort of extra levy by using a broker. There was a willingness to go, "Oh, no, but it's okay." And I had, probably a disproportionate conversation about, no, it's not like being an accountant where you get paid by the hour. You work hard for the best outcomes of the borrower, and then the lender will pay you based on success on a calculation for what they've saved in principle for not having, sort of staff and premises to do the job themselves. So I am concerned that, I think, look, having a local broker in a local area where, if you want to give your commission to your customers, look, no worries whatsoever. It's not a problem. I think having a national brand marketed, looking at taking, sort of having a national footprint, claiming to be an Australian first as well, which I was quite entertained by.
Yeah, I find it interesting to say the least, because it's been tried, it's failed now in a very public setting. Refund home loans now, by memory, Refund Home Loans was making false and misleading claims, and ACCC, picked it up and started proceedings on them, and they had to sort of, rescind everything.
The worst thing about that whole situation, for those of you that remember, it wasn't just the outward poor structure and running into problems with the ACCC. It was a franchise model, and there were franchisees that were left destitute. Yeah. There was terrible hardship for people who wanted to come into mortgage broking on this proposition that there was going to be this fantastic business model that was going to mean they were going to bring in so many loans that they could afford to give away this proportion of their sort of hard-earned income.
You think about it, and this goes back to refund, and it was a franchise model, was it?
The franchise model.
So buying a franchise on the basis that you'll be able to generate lots of business because you're giving away part of your money, right? Think about the type of customers or clients you're going to attract if your messaging and your marketing is, I will do all this work for you and I'm going to give you money back. I would say those, number one, those customers are probably pretty flighty, and they'll bounce around to the next best deals, like people that chase credit card points, swapping their credit cards every other 6 months so they can get some more points for Qantas.
That's you, isn't it, Phil?
Or whoever, yeah, it is. But number two, for those customers that are getting essentially a low cost model, I don't know if you're going to get the client servicing that you would need and expect from that, because I just can't see the margins in there to be able to service all of those customers effectively. So it's been tried before. Someone having a crack at it again. I don't know whether it's a franchise model or it's going to be. I'm sure it's going to be a digital. Oh,
it's AI driven.
Yeah, it's AI driven. So robots are doing all the work. Fine and fair. I think I looked at the website very quickly and said it will tell you within seconds whether or not you can get a home loan. Okay, well, let's see what happens in the back end subsequent to that. So we should shine the spotlight on this.
I think it's worth a debate. I've got particular views. I'm old and miserable. I'm sure there's going to be many people tuning in who are younger and a little bit more open-minded who are going to disagree with my particular position. I think it's a healthy thing for Broker Daily to debate. Yeah. To explore, I think robust discussion around different business models and different propositions. You're going to have people that are going to have opinions on either side. Look, the market will decide, or the customer will decide, I suppose, ultimately.
The customer will decide. Choose.
Would you fancy going to a refund dentist?
I wouldn't go anywhere refund. I do like a discount, but I'm not.
You go to a discount dentist, would you?
I go to a discount dentist. No, actually, I'm getting some work done on my choppers now, and I'm actually paying full freight because, like most,
you want the best work done.
I want the best work done. Yeah, I want the best work done. And I'm happy to pay full price.
Imagine a refund surgeon, Phil. Heart surgery, they'll split their fee with you.
Split your fee with it. If it all works out well, I'll give you back a little bit. If you cark it on the table, I'll give you back your dough. Like, I can't think of too many other businesses that give you back part of what they earn. Name another one.
I don't know. I can't. Yeah, we'll have a think about it. Oh, look.
Real estate agents sometimes give away part of their
not
fee
to the vendor.
Not to the vendor. They give it to the referrer.
Yeah, but that's different. That's a referral.
It's a referral.
I think it's. Look, I think we'll dig into this with Broker Daily. This is not a black and white issue about your commissions, both trail and upfront, and if there is merit in sharing that. As a broad brushstroke, there are many referral partnerships, but that's you're sharing commission for referrals, or maybe there's some reciprocal thing. As long as all disclosed, that's different to
a cashback
refunding.
Refunding. You're not even refunding. You're
not refunding.
You're not refunding because the broker gets paid. The broker's choosing to give away part of their income. It's
the thing. We'll take a break in a second, Phil. But what alarms me as a proposition, marketing is, I look at I'm tasked with marketing a few different elements of our business, and you're degrading your product by saying we'll give you money to use us. Now, be that the service of a mortgage broker, and surely it would only lend itself to the most vanilla of vanilla deals. I
can't see how a broker can give away their income to the person.
What's your value proposition? I'll give you some dough. We'll take a break there, otherwise we'll keep rambling on. Welcome back. Great to have you with us. Alex and Phil with you, Broker Daily Uncut. Phil, I wonder how many brokers are dialed in. I'm going to take a complete, change of direction here. I wonder how many brokers are dialed in with the property management sector, not the sales side, but the PM sector. I have a lot to do with PMs. I've been buying a lot. We've got a shared portfolio. We work with PMs for, best part of 15, 20 years together. You've got your own portfolio. I've been buying quite a bit at the moment. I'm really liking Melbourne. I've been working with my PM to actually use them to purchase. I bought 4 units using a property manager and getting the least yield I've had on those 4. The smallest yield I've got is 7.5%. The best is 8.2. And I'm familiar with, I'm familiar with a couple of businesses that are integrated. Birdie is one of them. They have, a number of services, mortgage broking and property management being 2 of them. I think it's probably an untapped area. Property managers are very close to my heart. We've got
little Birdie tells me that you've got a parallel podcast going on now. Or is that a secret?
It's not been launched yet,
isn't it?
Yeah, I caught up with the head of property management from LJ Hooker, Kathy Crampton, for PMX, Property Management Excellence.
Is a PMX podcast? Is that what it's called?
Yeah, it is. Yeah,
Wow.
yeah. She's got a very clear view of the property management sector, and it was quite interesting digging into it with Kathy. Different to mortgage broking because you have you build a rent roll, so similar to a loan book. So there's an annuity based on that. There's no upfront for property management, but the thing is, you get paid for what you do, because if you're a property manager, you win an investor, and then there's no if you manage to get an owner, then you're there and you got your annuity. They don't end up doing usually a whole load of work for no return, as in with brokers. But her view is that property management, there's a big opportunity for PMs to become far more aligned with investors, because obviously you're dealing with largely, you've got a handful of owners that might be overseas, but you're really dealing with people who are buying property as an investment. So I think there's changes taking place in the PM sector, and I think smart brokers are very dialed into the PM sector, and smart PMs are better aligned with brokers that particularly specialise in that area.
Yeah, it's a good observation. I think it's probably one of the most overlooked relationships that brokers have is with property managers. And I went to at least the start of the big PMX conference that you did late last year. I can't remember when it was, October, November maybe. And the MC at the time made the point, and I think it was based off a very sort of fleeting discussion he had with you 5 minutes before he went on stage. And this is this concept that mortgage brokers will cultivate relationships with real estate agents for the view of potentially being part of the loan set up when that transaction takes place. And it's very transactional. Properties don't get sold that often. Once a property is sold, it's sold, and that's done. The agent moves on, and the broker may get the loan. However, the property manager is intrinsically connected on sometimes a daily, weekly, monthly basis with the property investor. So it's probably the relationship which is the tightest and the most conducive to long-term sustainability of a property investment is the property manager. Property investors that I know are either looking to ensure they've got the best rate at all times, or they're thinking about how they're extracting equity from a property in order to buy another property or use those funds in another way. So why wouldn't a mortgage broker have an intrinsically tight relationship with property managers as their primary relationship? It's absolute madness that isn't taking place. And it is, smart brokers
definitely does.
But it's not really something which is vocalized quite a lot. You never hear brokers talk about their property manager relationship. They're always knocking around with real estate.
Never talk about them or definitively as a referral
definitely
partner.
As a referral partner, but it's probably the referral partnerships that's going to generate maybe the most growth for them.
There's an emerging change in property management, and sort of maybe similar to broking but different. That property management tends to spring up around a sales office, and so you've got a good salesperson who's been competitive in the marketplace for 4, 5, 6, 10, 8 years or so. They've then got out and set up on their own. They do what they know best, which is selling. They're only likely to be successful if they're a first-rate sales agent, and then they go, hey, I'll set up a property management arm to my business, but it's an afterthought. And so what they tend to do is they tend to just hire local people that have the same focus, and because there's a less visible skill set than sales, they just hire decent local people, but not really sort of attuned to the job. So they it's a bit of an afterthought, and there's a shift taking place in property management because you can build huge value in your rent roll, the same as you can with your loan book, huge value. And there is I guess what I would sort of refer to as a next-gen property manager starting to emerge, where they are looking at the value of their rent roll. The margins are quite thin in property management. You charge 4, 5, 6, 7% fee. Some of the more regional PMs will charge maybe 8 or 9%. And then, so you're getting that annuity, you're getting that weekly income off the weekly rental from the properties you manage. But, the PMs scramble to get connected with buyers agents because buyers agents add to their rent roll, but there's an equally valuable referral opportunity with brokers,
Yeah, that ecosystem makes sense for brokers, and you're actually even seeing it now where what do you call them, next gen property managers? A lot of them don't have sales arms, but some of them have mortgage broking arms.
Yep.
So you're actually seeing that sort of flywheel effect where property managers are building broking businesses in parallel with them. And why wouldn't you do that? If you're managing, 500, 600 properties under management, which is a pretty decent rent roll. There's 600 people that will probably have a mortgage or will need a mortgage in time. And it's a relationship where you can connect and communicate. The more you connect and communicate as a property manager, the better off you're going to be.
I think there's with PM, you've got some PMs that will have very established older customers, no mortgage, and they've got. We often forget how many properties in Australia don't have a mortgage on them, because we constantly deal and think about buyers, investors, and those that are sort of at the beginning of their journey or are building a portfolio where they're sort of highly leveraged. There's a lot of people who've got 1, 2, 3, 4, maybe more properties where it is just gives them their annuity. It's their as they're retired or approaching retirement. But you've got fast growing property managers that are building their rent rolls on the new and so the current edge of investors who are coming in, and they're always coming into market. We know, you look at investment lending at the moment, and it's up there in terms of the type of borrower that's coming through. So we'll I think as we go ahead, we've got PMX coming up. PMX is going to be a big brand under the REB umbrella. There'll be the PMX conference again and the awards. And look, I think it's a networking. Are you let
mortgage brokers come to that?
Oh, absolutely.
Yeah.
As a networking thing, because it's based, I don't know where we're basing it this year. It was based in Sydney this year. Sellout awards, as our awards always are, 400 odd people for an inaugural event.
Yeah.
But it's a great networking opportunity because here's the thing, you got localized. Everyone turns up for that, certainly for the conference, they're local based. But even if you can be a Sydney based broker and have a relationship with a WA based property manager, you don't need to be on the ground.
It's borderless in many ways.
Totally, from a broker perspective.
Most property managers are geographically constrained
because they got to go and do they got to do lease renewals, inspections. But there's Grant Mackay, who has new management. I know that he's sort of eastern suburbs based.
He manages some of my stuff.
He's manages some of mine as well. Yeah. He's absolutely superb. But he also does managements up. And I haven't really talked to Grant about this, but he's got them up to the far north coast of New South Wales as well. He's got quite a portfolio up there. So how he organises the...
But again, so next-gen property managers, that they're able to, there's ancillary services that you can use to support management in other areas. But for mortgage brokers, it's largely borderless because an investor might have a property. I've got, I don't know how many properties in Brisbane, property investments. I've never seen them. I've never seen them, and I've had them for a decade, and I've never actually eyeballed them myself. So it's largely irrelevant where the investor is; it's where the management takes place.
Totally,
a really smart mortgage broker will be out cultivating those relationships with property managers. That said, a lot of property managers will already have, existing relationships. So you've got to work out tactically what's the best way to get in front of
and therein may or may not involve some sort of referral arrangement, or there are a lot of professionals that go, I don't want a fee, I want the best possible service for my customers, whether you're a mortgage manager or a financial planner or an accountant. I know a lot who don't want a fee. They just want, because they've got that deep sense of value for their customers, and they will choose their partners based on being aligned in terms of the value proposition. But I'm not saying that having a referral, there's plenty of very good operators that do share fees, and still give excellent outcomes to their customers. Different models for different businesses, but there's definitely opportunity out there.
Good.
Phil, it's been good having you on the show. Look how the time's flown. For us anyway, not for anyone listening. They'll be bored to death.
Moaning on. No, it's good. No, thanks for having me back.
Guys, thanks for tuning in. Love having you with us. If you're just kicking off your working year, welcome back. If you've been with us since early Jan, it's great to have you with us. Have a fantastic week. We'll speak to you soon.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.